Hello, my name is Amanda Kendal. I'm with True Resolve Tax Professionals. I wanted to come on video today to explain the difference between an IRS lien and an IRS levy, because we get a lot of questions on this, and I know there's a lot of misconceptions and confusion about which one does what and how they each work. So I want to just break it down really quickly for you and explain what they are. So we're going to start with an IRS lien. This is a federal tax lien. You will get this in the mail from the IRS as a certified letter. What a lien is it is public record. It is essentially the IRS's way of saying, you owe us money and we're now recording it and making a legal claim to protect our interest in what you owe us. What a lien does is its first thing it's going to do is it's going to hit your credit report. It's going to be recorded with the county courthouse. So when you start getting bombarded by phone calls from companies that do tax resolution work, and they're saying that they know you have a tax lien, this is where it's coming from. It's coming from the filing with the public county courthouse. So that is when you're asking how people know that you owe, that is where that information is coming from. The big thing a lien's going to do beyond affecting your credit report is if you own a home and you go to sell that home, whether that is your residence or a rental property, this lien is going to take precedence over the equity in your house. So your lender, where your mortgage is, will get priority because they are typically the first lien holder. However, the IRS is essentially coming in as the second lien holder before you get any equity. So if you have a home with equity and you're looking to sell it and you have an IRS tax lien, there's some steps you're going to need to take in order to have that lien either removed if you can't full pay, or to be able to pay that lien in full at the time that you sell the property. So there's some steps around that, and you can contact my office if you have any questions and that's your particular situation. The other thing that we see is if someone is going to buy a house, buy a car, sometimes the lien can affect their credit to the point where they can't qualify for those things. So that is what the IRS federal tax lien is. Again, it's public record of the IRS's legal claim to protect their interest in the money that you owe them. So now let's take a look at what an IRS levy is. IRS levy is a legal seizure of your money. This can come in the form of a wage garnishment, a bank levy, or an accounts receivable levy. So let's touch on each of these really briefly here. So a wage garnishment from the IRS is going to be sent to your employer and basically telling your employer, hey, your employee owes the IRS and we want you to withhold from their paycheck every week, every payday, however often you get paid, a certain amount of money that you're going to send to the IRS so that we're getting paid. This usually doesn't come out unless you haven't cooperated or responded to IRS notices. So if you're getting this, couple things I want you to know. You can stop this if it is creating a financial hardship. You can lessen it if it's creating a financial hardship. But in order to do this, there are some requirements. You're going to have to be current with your taxes, and you're going to have to be willing to work with the IRS and set up a resolution. So a wage garnishment can be stopped. The next, and this one is ongoing until you make an adjustment to that with the IRS. A bank levy is typically a one-time levy. So I like to explain this in very round number terms here. So let's say you owe the IRS $50,000 and they send a levy to your bank for $50,000. In your bank account, you have $2,000 on the morning that the bank receives the levy and processes it. Your bank is going to take that $2,000 and basically move it into a holding account for 21 days. This is essentially giving you 21 days to work with the IRS and see if you can come up with a solution that allows the bank to release those funds back to you. What a bank levy does not do is continue to hold funds in your bank up until the point that that $50,000 is collected. So the way I explain this to my clients is that if you have $2,000 in the bank the morning a levy is received by your bank and they take that $2,000 and you are getting paid the very following day and you're going to have $5,000 deposited into your bank account, that $5,000 is not captured by the bank levy. It is a one-time hit from whatever is in the bank at the time the levy is processed and received. So I like to specify that one. Again, you have a 21-day window to get those funds back. Once those funds are sent to the IRS, it is really, really difficult to get those funds sent back to you at that point. So if you have a bank levy, you want to work very quickly to address that with the IRS agent, whether that is a revenue officer or whether that's with the National Collections Division, Automated Collection System. So an accounts receivable levy is similar to a bank levy, but also different. So an accounts receivable levy also captures 100% of what you have at that time. However, an accounts receivable levy is what you're owed. So let's say you're self-employed or you have a business and you have invoiced one of your customers for $40,000 and the IRS comes in and issues an accounts receivable levy. If you are owed $40,000, that $40,000 is now intercepted by the IRS. There's no 21-day window on this. This can move very quickly depending on when you're getting paid and when you were invoiced and when the levy was received by your customer. Also, with an accounts receivable levy, there is one of two ways that can be handled, and a lot of that depends on the way the IRS issues out the form. An accounts receivable levy is typically only a one-time hit. So whatever you're owed at that time, they're going to send to the IRS, and then you'll get your next check. However, some of these, and you see this in cases where revenue officers are involved and a taxpayer has been very uncooperative and not responsive, an accounts receivable levy can be an ongoing levy where they will take every payment that you are due up until the point that you either address this by resolving your tax debt and setting up an alternative resolution option, or until your taxes are paid in full. So we've touched on all of those. So I hope that helps clarify the difference between what a lien and a levy is with the IRS. If you do have any questions, you can contact True Resolve Tax Professionals at 720-319-8954, or you can reach us online at www.trueresolvetax.com. Thanks.